All right, what's up, party people? We are giving this a shot here. We're actually streaming live right now on YouTube and Facebook. We'll see how long this lasts. But I have some great stuff to share with you today. And we're going to take a look at a question I've been getting quite a bit lately. So people are refinancing right now, saving lots of money. It's a great time to do it. In fact, I spent all morning locking loans today, especially if you have a VA loan. Give me a call today. We've got one of those opportunities right now where the rates they've come down. Remember, this lasted for about 10 business days last time. Rates are just super low again. It's crazy time. I locked, I think, 5 or 6 loans already today. And, looking to lock more. Get locked in on a good day. We can get the paperwork later. So that's what's going on right now. A lot of things are rates would be even better if the stock market wasn't doing so well. But the question I've been getting with people who are saving $500-$600 a month, some people even more who are consolidating debts, where do I apply that money? Should I take that monthly money and invest it in the stock market? Should I take that monthly money and pay towards the principal of my mortgage? What's the most economically efficient thing to do? And I'm going to go through that. And there's actually a very specific way to handle that. Also, on Wednesday at 4 o'clock, we'll be going live with at least 2, if not 3 personalities about the stock market just in general, what's going on. These are people who are behind the curtain. They can show us some stuff. It's going to be really, really cool. The real estate debate is on Friday. Amazing guests lined up for the real estate debate on Friday. David Serpa, Gabe Mendez, Nadia Colucci will be on. So we've got a bunch of cool stuff coming up. So let's take a look. First of all, the big thing last week was, this conundrum that we were in with interest rates and mortgage bonds. And we saw what happened there. I've been trying to get to this video, but I have to serve my clients as a priority. Of course, this is a terrible line, but essentially we had this sort of what's called a flag. But we sort of had this flag building, and we were really getting squeezed here. Well, we broke out to the upside. And as you recall, that's what I expected would happen because we have the Federal Reserve on that side of the trade. So we've broken out. We've gone higher. This is really, really good. Remember, higher mortgage bond prices means lower interest rates. Okay, so keep that correlation in mind. So we want mortgage bonds to go up. This up here is the all-time high. So we're still a ways away from that. And we haven't gained back all the ground that we've lost yet, just in this recent cycle. So it's not like things have gone absolutely crazy at this point, but things are looking good. Looking good. Looking like we might go back up here and touch this again, maybe. Maybe not. Maybe it'll turn over and just go straight down. Who knows? But giving us a shot at maybe seeing some of those historically low mortgage rates again. And we're getting really, really close right there. We're at that point where we're seeing bonkers opportunities. Some of these situations, are really close. Maybe we're not at 2 1/4, maybe you're 2 1/2 or 2 3/8. Like so good. Maybe not all the way at the bottom of the rate sheet. Now, keep in mind, I'm talking about no points. We don't charge any points or fees, origination points or any lender fees on VA loans here at Line Mortgage. So let's keep that in mind as well as my AC kicks on. My audio is going to probably start to suck a little bit. So here's the first couple of things to notice and really think about when we look at this. So people are asking me, should I invest in stocks or real estate? Well, let me just show you. Here's stocks since 1980. Isn't it crazy to look back at this and go, that was the whole crash? That was the crash. That. Look at where we are now. Way higher than that. Way higher than that. This was the stock market crash. The Great Recession was that. That's it. It doesn't look like much when you look back on it a decade later plus, and you see it as just that was just a little blip. Look, that was a buying opportunity is what that was. So, stocks, over long periods of time, do really well for people. Guess what? So does real estate. So, and this is the crash here on this one. This one doesn't go back as far, but if you were, you'd see the same thing with real estate. The prices are going to go up. They just are. In an inflationary environment, which is what we have and what we always will have, because we're always focused on growth and better and more and cheaper. And in this country, that's just the way it's going to be. So that's definitely where we're at. That's where we've been. That's where we're going to be. So really investing in either one is not a bad idea. But what's the difference? So if you refinance and you save a bunch of money, here's the thing. A lot of times you're refinancing, you're starting your amortization over. You're starting back at a 30-year AM. Maybe you were only at a 27 or 28. It wasn't that big of a deal to go back. But now that you've gone back to the 30-year, the first 7 years on a 30-year loan, here's the nugget. The first 7 years is when you're going to pay most of the interest. So if you can, take the money that you're saving and pay it into the mortgage first for the first 7 years, it really starts to roll over. It's a bell-shaped curve when it comes to paying interest. So it really starts to roll over and you get more principal and more principal. Because every payment you make on your mortgage, you're paying more principal than the previous. And when you're making additional principal payments toward your mortgage, you're lowering the amount of interest in the next payment. Because the interest that's calculated in each payment, you know how your payment's the same every month, but how it's made up, the amount, how much of it is principal and how much of it is interest, that changes each month. Well, it just changes like this. It starts out with mostly interest, and just over time, it just slowly goes like this until it's about even, and then it becomes mostly principal, and towards the end, it's almost all principal. So if you're able to cut out, if you're able to make big chunks towards principal during that first part to get over the hump, you can really save yourself a ton of money. So if you're saving $500, $600, $700 a month, the best thing to do is to put it toward the mortgage for the first 6 or 7 years. It's the most efficient thing to do to save you money in the long run. And you can invest. Now, the people that we'll be talking with on Wednesday may disagree with me on that. They may say, but why would you do that? You're paying into equity. It's earning you 0%. You're not getting anything for it. But you're saving on interest, which is front-loaded. So when you talk about paying, let's say your interest rate is 2.5%, you're really paying 2.5% on the balance as a factor of interest over the course of the year. So your effective interest rate initially is much, much higher than that. Much, much higher. I mean, look at the portion of interest in your payments. It's 60%, 70% interest that you're paying initially of the payment. So the effective interest rate is the key, and you can really reduce your effective interest rate by making those additional principal payments early in your amortization. Now, if you're doing a 15 or a 20-year amortization, which a lot of people are taking advantage of, hey, I can get almost the same payment, do a 15-year, no-brainer. You save yourself so much money that way, and it requires no discipline at all. So that's obviously a great thing to do. If you can, be disciplined and pay towards the mortgage, then go ahead and on the other side of that thing, once you get that 6 or 7 years down the road, then you can go ahead and start investing into the stock market and things like that. Now, I know time in either one is going to win for you. Some people would say, hey, you're already in the real estate market. Go ahead and get in the stock market. Let that 6 or 7 years of $500 a month build up over there. It's hard to argue with that. It really is. Like I said, I showed you both the graphs. This is like can't go wrong territory, right? I mean, just historically speaking, can't say can't go wrong, but look at real estate values. Look at stock values. They go up over time. So it's really good to be invested in both. And that was the mortgage rate breakdown that we looked at. Here's the thing. Why not do half and half? You're saving $600 a month. Spend $300 extra a month toward the principal on your mortgage payment. Put $300 into your brokerage account. Buy the IVV, which is the S&P tracking ETF that has almost no fees. Very, very simple. IVV. Let me go ahead and write that down. I know people are going to ask me about that. I like it because it tracks the S&P. It's very, very simple. You get 500 companies. IVV. Very, very low cost. I think last time I checked, the fees on this was like 0.07%. It's like the lowest you've ever heard of for any kind of managed fund. And it tracks the S&P very, very well. So it's a very inexpensive way to buy the S&P, essentially, and not have to worry about buying individual stocks. So invest away. Go in for both. You can't go wrong. But if you want to be as efficient as possible, you get some immediately big returns on your principal pay down on your mortgage in the long run and the amount of interest that it saves you. If you plan on being your home for any period of time, which if you subscribe to what I'm talking about, home ownership strategy, you're not buying real estate unless you're buying it for the long term. You're not buying it just to have it or just to say, I don't want to rent the next 2 years or whatever. You're buying real estate because you think it's a good long-term investment. And if that's the case, then you need to be looking at your total cost, right? Your effective interest rate. Those are the things that we have to really take a look at. So if you have questions about any of this stuff, you want to see how much money you can save by refinancing, Derrick Evans, NMLS 155010. That's my cell phone. You can call or text me there. Happy to help. Available pretty much every day. Yeah, I pretty much work all weekend. My phone has rang multiple times from numbers that I don't recognize since I've been doing this video. And it's a great time. It's a great time to get locked in. It's a great time to research your options, to know what they are. Can I pull cash out and invest in something else? Can I build an ADU on my property? Can I take cash out of my home to buy an investment property in a different state? A lot of people doing all these things. And it's because it makes sense, because right now property values are high, because right now real estate interest rates are low, real estate's on the move. It is just a great time to look and know what all of your options are. Make sure you don't miss something and go 3 years later, like, why didn't I do that? Your neighbor tells you a story about how they did all these things, great things, and you're like, I was just asleep at the wheel. Don't be asleep at the wheel. when opportunity's knocking, make sure you know what your options are. Doesn't mean you should pull the trigger. Doesn't mean you should do something, but you should know what's going on. And that's why I make these videos, and that's why I'm here to help you. So if you have questions, give me a call, give me a shout. Share this video. Let's help make your friends smarter than everyone else. I'll see y'all soon.